What's good, YouTube? It's jacobcrypobury here. Today we're going to explore some critical crypto news as the markets continue to have a meltdown. So buckle yourself in, get ready for a long ride, make yourself a coffee, get comfy as we explore some of this vital news together. We're also going to have a look at some of the top projects and what's going on, a bit of news around them too, as well as the current Bitcoin price and analysis and where we think it can go next. First things first, US Fed hikes its benchmark interest rate by 0.75 percentage points, the biggest increase since 1994. So we're going to be looking at some extraneous macroeconomic factors that are currently suppressing bull runs from happening, things that are putting pressure on economies, such as inflation rates. So it's not really a great thing to see that the US Feds are doing this at the moment. One other crazy surprising thing is that Swiss central bank surprises markets with first rate hike since 2007. So what's really crazy about this is the S&P still expects the Swiss economy to grow by around 2.5% in 2002. But what's absolutely crazy, as we can see, just reading this particular paragraph, the Swiss National Bank raised its policy interest rate for the first time in 15 years on Thursday, joining other central banks in tightening the monetary policies to fight resurgent inflation and sending the safe haven franc sharply higher. Look at this. The central bank increased its policy rate from minus 0.25% to minus 0.75%. That's right. You read that correctly. Minus negative interest rates. Wow. Okay, Switzerland. Remind me never to go to your country. I'm joking, I've got nothing against that country, but this is just a huge indicator as to some of the small problems with the global economies at the moment in today's time. ECB signals first rate hike in more than a decade. The strong signal of a larger interest rate hike in September came as a hawkish surprise. As we can see, Frankfurt, the European Central Bank, will end its bond buys early next month and plans to lift interest rates for the first time in over a decade by 25 basis points at its July meeting, with inflation projected to top the central bank's 2% target until at least 2024, it said on Thursday. Another major decision from the governments over there, more tightening of the monetary policies. Now we're going to move into some Celsius and 3 Arrows news. Nobody is too big to fail. The fall of Celsius below zero. That's some cold news. And 3 Arrows Capital. So nobody is too big to fall. We saw Terra Luna. We saw the destruction, the demise of Terra Luna. What can effectively happen here? So Celsius is a retail-friendly crypto lending platform and one of the most popular platforms in the market. What they do is simple. They take your deposits, invest it into the crypto market, and participate in DeFi to earn yields from the user while taking a small cut. Almost like a bank, I suppose. During the bull run, Celsius promised users safe and very high returns. So it's just like when you're staking on a centralized exchange, for example, Binance, when you're staking there, the reason you're getting a lower APY is because actually Binance is taking a cut of what you're staking right there. So we can see here, 3 Arrows Capital, 3AC. Founded by Zhu Shu and Kyle Davis in 2012, they eventually grew to be one of the largest crypto players in the space, with investments stretching across multiple crypto sectors. Now, this is interesting, isn't it? The point of round numbers is to buy at them. Selling them is, au contraire, a grave inaccuracy. Hope this helps. What can we also say about this? Well, 3AC confirms near 200 million loss from Luna collapse. The Terra Luna situation caught us very much off guard. So 3AC, not great for the holders to announce this, but at least they are transparent enough. So we are committed to working things out and finding an equitable solution for all constituents. 3AC co-founder Kyle Davies told the WSJ. The fund had over $3 billion worth of cryptocurrencies under management as of April. It doesn't actually say which year. But yeah, 3AC also took a big hit from this particular activity, which is of course not good. What else can we look at? 3 Arrows. Arrow to the knee. 3 Arrows Capital sells over 56,000 staked Ether or STETH amid growing STETH discount. So this is another one, very controversial, lots of fear, and it's not good for the holders. Wallets believed to belong to major investments firm 3 Arrows Capital because they've recently sold over 56,000 Lido staked Ether STETH, leading to a further decoupling of the price relationship between the token and Ether itself. So When we see depegs, it's usually just a major disaster. Look at Tron and USDD, a bit of decoupling going on there. Look at obviously UST and Terra, what happened there, major decouple, huge collapse. And I think this is also having a correlation with the Ethereum price and why we saw so much negative volatility and price action, and almost it was actually not really correlated to Bitcoin's movement at all. So 3AC believed to have market sold 56,000 STE. In a tweet, and blockchain security firm PeckShield, 3AC swapped $22.83 or $26.5 million worth for ETH. Data from Etherscan show the wallets associated with the crypto hedge fund sold over 56,000 ETH in total. Those sneaky little buggers. So it's pretty crazy. Celsius, a currently embattled crypto yield provider, is also known to own a significant STETH stash. So lots of these bigger projects are holding a large amount of STETH. What do you think about that, guys? Is that good or bad for the markets? Can we recover from this? Will we see the regain of trust in the markets? Only time will tell. What can we talk about as well? Economical factors. We're going to talk about redundancy in the crypto sector, crypto news, as the market continues to melt down. Even huge exchanges like Coinbase have actually had to make unfortunate decisions here. As we can see, Coinbase terminates 1,100 employees following 25,000 tech sector layoffs since May. The US-based cryptocurrency exchange company Coinbase announced mass layoffs and cut over 18% of its workforce on Tuesday after it abruptly locked out employees from their work systems. More than 25,000 tech workers have also been laid off since May as the stock market bubble continues to burst. So the cash flow is no longer there. They can't sustain all of these wage expenditures, salary expenditures. So of course, the only thing they can do is cut off this massive outflow of money from the operational side of things, which is going to cause a devastating domino effect on people working for these type of businesses. We're going to see it with many other exchanges. Hundreds of Coinbase employees in the USA woke up on Tuesday to find that they no longer had access to the company's systems and learned of their termination via a very simple HR note sent to their personal emails. It's a bit cold. Imagine waking up and you go to log into your work portal and for some reason you can't get in. The first thing that comes to your mind is everything okay? Have I been fired? Do I have a job? Am I going to pay the bills at the end of the month? Pretty cold, pretty hardcore, but this is what can happen in these markets. And of course, it's hard to have job security in these very volatile markets as well. So one thing to consider. On the flip side, crypto firms have been slashing jobs left, right, and center, right? Binance are actually hiring, and I also heard that Kraken are also hiring. So maybe a lot of Coinbase people are going to flock over to Binance now and maybe get a job nice and easy. So the job market has been rough in the recent months at crypto firms struggling to make it through the winter that has seen prices drop steadily. Cryptos tumble. Of course, we've seen Bitcoin hit that 200-week moving average of the June 13, May 12 Terra Luna FUD also caused a lot of capitulation. Not every crypto company is the same boat when it comes to slowing down hiring or laying off employees. Speaking to the Consensus 2022 conference last week, Binance CEO Changpeng Zhao said the company had the resources to expand its hiring and focus on new acquisitions and talent. So it's nice to see that actually there's some contrarian here. Binance and Kraken are looking to employ. So guys, if you're one of those people that lost a job, you know where to go. Go head over to Binance right now and go send that CV in as quick as you can. What else can we look at? BlockFi and Crypto.com lay off hundreds of staff as coins slump. They blame the dramatic shift in economic conditions. Looking at interest rates, looking at DXY, S&P 500, stocks, much more. The devaluation of the dollar. BlockFi, a platform for trading and lending cryptocurrency, announced via a blog post on Monday that it's laying off 20% of its 850 employees, around 170 to 200 people. It makes you wonder what sort of job roles are actually being slacked off. I wonder if it's like the freelancers or the subcontracts as opposed to more full-time permanent contracts. But it's interesting to see. Crypto firms have struggled to weather the storm. Coinbase announced that it was slowing hiring, and also 300 jobs were slacked off right there. So quite a destructive market at the moment. Lots of turmoil, lots of uncertainty, and this all carries over and has an effect on the price of cryptos today. Of course, in a few years, we're probably going to see the complete opposite happen as things turn euphoric again, the market booms, the demand for recruitment goes up, and jobs are created once again because there's more cash flow coming in. We're going to look at Bitcoin quick, a bit of price analysis. One thing I want to show you is the 200-week moving average. Now, what's happened is we finally lost that 200-week moving average right here, guys. So we lost that 21k level. It might have been a bit higher, actually, about $22,500. Now, we also did this in March 2020 with the COVID-19 crash. We also did this in 2018. As you see, we saw capitulation after the 2017 bull run. Now, the difference is each time we were in the 200-week moving average on this particular area, we came down into the green logarithmic regression band. Now, so far, we've not seen that green logarithmic area basically tap down onto. And if we did, we'd be looking at around a $15,000 Bitcoin. And I do personally think that it could happen. Looking at the weekly RSI, we are super oversold more than we've ever seen in the last 10 plus years. So it still makes you think, can we honestly go lower? Well, I think the answer, nobody knows, but always stay prepared for the worst. We're on the daily time frame. We can see Bitcoin gets a nice recovery from this $17.5k level, and we're making our way back up to hopefully $27,000 to $25,000 before seeing rejection to the downside. Of course, we can retest this 19.9k level, capitulate further down. What I also wanted to look at is the miners, what the Bitcoin miners doing. Well, the miners are starting to accumulate again, as we see the selling stopped around this dump here, late June 2022. And miners are accumulating once again. Could this also signal the probable bottom of the Bitcoin markets at the moment? Rainbow chart is also suggesting that we are back into a beautiful fire sale, meaning you can effectively start accumulating and buying more cryptocurrency. Of course, this is not financial advice, but this is exactly what I'm going to start doing. And you can already see that we're getting a small bounce out of this blue fire sale territory. So you've got to be quick. You don't want to miss out on these fire sales. Not financial advice, of course, but if you do want to grab crypto today after seeing this lovely indicator, do head on down below to the description, click through and buy some crypto. We're also going to explore some of the top movers in the market as of this week. And of course, one of them is going to be synthetics. We are up a huge amount, guys. I mean, we have been all the way down to $1.53, and we're already making gains of over 100% at $3.38. Syncs is rank 78 right now. Really good to see this momentum. And what's the cause? I think personally it's the atomic swaps on the derivatives and options side of things, where we have the dApps, and we can see Syncs just hit 200 million plus in daily volume. Here's why: atomic swaps on 1inch and Curve Finance average 100 million daily volume. Then you've also got the optimism and the options as well, which are synthetic powered trading protocols, as we see Quanta.io, Lyra Finance, Polynomia FI. Syncs has absolutely exploded. They have building new products, or is it the core derivative-ish product reaching PMF on optimism? Who knows? Either way, really big stuff. We've also got Solana. That's got some crazy news coming out. If you look at the 7 days, we can see we're up from $28, and we came and poked through that $40 level almost. Market cap sitting at around 12 billion at the moment. So it's certainly one of the blue chip larger projects in the space, sitting at rank 9, looking really good. We got some huge news as well for Solana at the moment. Solana NFT marketplace Magic Eden raises $130 million. Plans multi-chain expansion. So the top NFT platform in Solana is newly minted crypto unicorn with a $1.6 billion valuation. It's going on to other blockchains. This is pretty massive. The marketplace plans to expand beyond Solana to include other platforms as well. So really, really bullish for the NFT sector here on cryptocurrency. So let's at least keep an eye on what's going here, but I think this has, of course, had a bit of a catalyst on the price action. Over on gold, $60 at the moment, but you look at the 7 days, you can see we're up from $45. You're looking at a really big increase there, guys. Maybe even over 50%. I haven't quite done the maths, but we're seeing a $1.35 billion market cap. Over on gold is rank 35 at the moment. Definitely not a coin that you do want to miss out on. It moves quickly, and once it's moved, it's already too late. As you can see, we're looking undervalued at this $50 price level versus, you know, where we were last at $50 in January of 2021. Are we going to see continuation to the upside for this project? Most likely, to be honest. And I think this is partly the reason Now you can access historical data on the Elrond network by generating a dedicated endpoint through our API platform, blastapi.io. There's also a public API option. Learn more about it here. So this is massive news for the Elrond gold space, and I do think this is part of the reason as to why we're seeing a pump right now. Everyone is excited, as you can see from the comment section. I am excited. I am going to actually admit it. I do hold some Elrond gold. I'm not going to pump my own bags, but I'm just letting you know it's probably a good coin to hold. What's next? Cardano, $16 billion, $0.47 price at the moment, rank 7 in the crypto space. Why do I think Cardano is going to pump soon? We got the Vasil hard fork, guys. Looking retrospectively, we're so undervalued compared to this $3 level, trading all the way back at these previous levels that we saw basically in, again, February of 2021, a long time ago, a whole year and a half ago, before the massive parabolic rallies that led these projects to get some crazy all-time highs. The Cardano developers have delayed the Vasil upgrade. I'm not sure we know exactly when, but all we do know at the moment is that this development is still not going to happen just yet. So that could be why we've seen a bit of slowdown on the price, because people are really excited, anticipated. Then we were told about the delay of this particular news. So stick around and keep yourself updated with these projects as they do bring out more exciting protocols and expansions to the network. If you enjoyed this video, guys, you know what to do. Smash that subscribe button, like, comment down below. Let me know what you want to see on this particular channel. Also, navigate yourself into the Discord channel, which you can find in the description below. You can also find the Telegram Learn to Trade if you want to maximize your education, learn how to navigate the markets and apply technical analysis, and also get yourself into that BTC Telegram so you can stay up to date with the most latest insights and trending crypto news. Thank you, everyone. Stay safe. See you later.